What's up, traders? Welcome to a live episode of Inside Traders. We're here with the man himself, Mr. Jerome Powell, who is going to tell us what the future is. So let's listen in and see what he has to say.
Rates, fiscal transfers, curtailed spending on in-person services, and shifts in preference away from using public transportation and from living in cities. But because of a shortage of semiconductors, vehicle supply actually fell.
The market is like freaking
Vehicle
out.
prices spiked, and a large pool of pent-up demand emerged. As the pandemic and its effects have waned, production and inventories have grown, and supply has improved. At the same time, higher interest rates have weighed on demand. Interest rates on auto loans have nearly doubled since early last year, and customers report feeling the effect of higher rates on affordability. On net, motor vehicle inflation has declined sharply because of the combined effects of these supply and demand factors. Similar dynamics are playing out for core goods inflation overall. As they do, the effects of monetary restraint should show through more fully over time. Core goods prices fell the last 2 months, but on a 12-month basis, core goods inflation remains well above its pre-pandemic level. Sustained progress is needed, and restrictive monetary policy is called for to achieve that progress.
Ooh, scary words.
In the highly interest-sensitive housing sector,
is
the effects
not
of monetary
hating
policy became apparent soon after liftoff. Mortgage rates doubled over the course of 2022, causing housing starts and sales to fall and house price growth to plummet. Growth in market rents soon peaked and then steadily declined. Measured housing services inflation lagged these changes, as is typical, but has recently begun to fall. This inflation metric reflects rents paid by all tenants, as well as estimates of the equivalent rents that could be earned from homes that are owner-occupied. Because leases turn over slowly, it takes time for a decline in market rent growth to work its way into the overall inflation measure. The market rent slowdown has only recently begun to show through to that measure. The slowing growth in rents for new leases over roughly the past year can be thought of as in the pipeline and will affect measured housing services inflation over the coming year. Going forward, if market rent growth settles near pre-pandemic levels, housing services inflation should decline toward its pre-pandemic level as well, and we will continue to watch the market rent data closely for a signal of the upside and downside risks to housing services inflation. The final category, non-housing services, accounts for over half of the core PCE index and includes a broad range of services, such as healthcare, food services, transportation, and accommodations. 12-month inflation in this sector has moved sideways since liftoff. Inflation measured over the past 3 and 6 months has declined, however, which is encouraging. Part of the reason for the modest decline of non-housing services inflation so far is that many of these services were less affected by global supply chain bottlenecks and are generally thought to be less interest-sensitive than other sectors, such as housing or durable goods.
For real.
Production of these services is also relatively labor-intensive, and the labor market remains tight. Given the size of this sector, some further progress here will be essential in restoring price stability. Over time, restrictive monetary policy will help bring aggregate supply and demand back into better balance, reducing inflationary pressures in this key sector.
I'm watching
Turning
the prices.
then
I wish
to
I
the
could show you
outlook,
everything.
although further unwinding
some
of
cool shit
pandemic-related
going.
distortions should continue to put some downward pressure on inflation, restrictive monetary policy will likely play an increasingly important role. Getting inflation sustainably back down to 2% is expected to require a period of below-trend economic growth, as well as some softening in labor market conditions.
These days, I'm over it. Let's get jacked. Let's get veins on veins.
Restrictive monetary policy has tightened financial conditions, supporting the expectation of below-trend growth.
But first,
since last year's symposium, the 2-year real yield is up about 250 basis points, and longer-term real yields are higher as well by nearly 150 basis points. Beyond changes in interest rates, bank lending standards have tightened and loan growth has slowed sharply. Such a tightening of broad financial conditions typically contributes to a slowing in the growth of economic activity, and there is evidence of that in this cycle as well. For example, growth in industrial production has slowed, and the amount spent on residential investment has declined in each of the past 5 quarters. But we are attentive to signs that the economy may not be cooling as expected. So far this year, GDP growth has come in above expectations and above its longer-run trend, and recent readings on consumer spending have been especially robust. In addition, after decelerating sharply over the past 18 months, the housing sector is showing signs of picking back up. Additional evidence of persistently above-trend growth could put further progress on inflation at risk and could warrant further tightening of monetary policy. The rebalancing of the labor market has continued over the past year but remains incomplete. Labor supply has improved, driven by stronger participation among workers aged 25 to 54 and by an increase in immigration back toward pre-pandemic levels. Indeed, the labor force participation rate of women in their prime working years reached an all-time high in June. Demand for labor has moderated as well. Job openings remain high but are trending lower. Payroll job growth has slowed significantly. Total hours worked has been flat over the past 6 months.
Look at what
and
we
the
get to
average
do with
work
our
week
lives.
has declined to
Everyone
the lower
through
end of its
history was
pre-pandemic
starving
range,
for rice
reflecting
and
a gradual
freaking beans.
normalization
And look at
in
what we're
labor
doing
market
with our time.
conditions.
This is a gift.
This rebalancing has eased wage pressures. Wage growth across a range of measures continues to slow, albeit gradually. While nominal wage growth must ultimately slow to a rate that is consistent with 2% inflation, what matters for households is real wage growth. Even as nominal wage growth has slowed, real wage growth has been increasing as inflation has fallen. We expect this labor market rebalancing to continue. Evidence that the tightness in the labor market is no longer easing could also call for a monetary policy response.
What's the fix that?
Turning to the path forward. 2% is and will remain our inflation target. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to that level over time.
There's no way you're going to break through that. Fuck you.
It is challenging, of course,
Whoa,
to
they
know
broke
in
it.
real time when such a stance has been achieved.
Where are we at?
There are some challenges that are common to all tightening
this is where we're
cycles.
headed.
For example, real interest rates are now positive and well above mainstream estimates of the neutral policy rate. We see the current stance of policy as
we just started
restrictive,
there.
putting downward pressure on economic activity, hiring, and inflation. But we cannot identify with certainty the neutral rate of interest, and thus there is always uncertainty about the precise level of monetary policy restraint. That assessment is further complicated by uncertainty about the duration of the lags with which monetary tightening affects economic activity and especially inflation.
Nuts.
Since the symposium a year ago, the committee has raised the policy rate by 300 basis points, including 100 basis points over the past 7 months.
Dude,
and
we
have
are
substantially
just
reduced the size of our securities
This
holdings.
is nuts.
The wide range of estimates of these lags suggests that there may be significant further drag in the pipeline.
Look at this.
Beyond these traditional sources of policy uncertainty, the supply and demand dislocations unique to this cycle raise further complications through their effects on inflation and labor market dynamics. For example, so far, job openings have declined substantially without increasing unemployment, a highly welcome but historically unusual result that appears to reflect large excess demand for labor. In addition, there is evidence that inflation has become more responsive to labor market tightness than was the case in recent decades.
Let's see what the sentiment is.
These changing dynamics may or may not persist, and this uncertainty underscores the need for agile policymaking. These uncertainties, both old and new, complicate our task of balancing the risk of tightening monetary policy too much.
So this is their move for Fed.
Let's
note this for the future.
Doing too little.
This is how they handle
could allow
Fed.
the above target inflation to become entrenched and ultimately require monetary policy to wring more persistent inflation from the economy at a high cost to employment. Doing too much could also do unnecessary harm to the economy.
We'll talk about
as is often the case,
and how
we are navigating by the stars under cloudy skies. In such circumstances, risk management considerations are critical.
That's also the truth.
At upcoming meetings, we will assess our progress based on the totality of the data and the evolving outlook and risks. Based on this assessment, we will proceed carefully as we decide whether to tighten further or instead to hold the policy rate constant and await further data.
Oh, you're not
Restoring
going to
price
give us the
stability is
pause. He's
essential
not going to give it
achieving
to us.
both sides of our
Oh,
dual mandate.
okay, that's okay.
We will need price stability to achieve a sustained period of strong
That's
labor market
okay.
conditions that benefit all.
I'll buy a put on that, though.
And we will keep at it until the job is done. Thank you.
I'll buy a put on that. Buy puts, buy puts. Was that it? Oh, shit. I thought we were going to hang a little bit longer. Let's see if our friends at CNBC have any commentary for us.
I assume.
Is that no longer live? Let's see if I can get them. CNBC. C Pro. Buy puts, buy puts, buy puts. Let's see what else is going on. We have Brother Steve.
I would say he's definitively on hold, but kind of leaning towards a more hawkish stance if the data does not continue to break the way it's been breaking.
David didn't use the
I
word
want to
pain
welcome
either.
you
Would you
to
agree
the
it's a net hawkish speech?
2023 Jackson Hole
I mean, I think,
Conference, Structural
I think
Shifts in the Global
his
Economy.
reading of
Chair
core
Powell,
services
the
inflation
floor
ex
is yours.
housing is really interesting because as we look at these numbers, a lot of this is actually the lagged effect of higher vehicle prices, which have pushed up auto insurance, which have pushed up auto repair and pushed up auto leases. And a big chunk of it is that it's not really higher wages. And so I think he's just misreading this. He's got this idea that high wage growth is actually going to cause inflation to be persistent, and all our modeling says that's not really what's going on here. So it's interesting, but they can hopefully they will wait and see to see how that plays out.
He also
rather than tightening
acknowledges, though, that that's the part of inflation that doesn't, or the economy that doesn't seem to be particularly sensitive to changes in interest rates in the short term.
Well, that's true, and actually not very much of the economy is sensitive to interest rates at all, because it's basically it's just let's crush the housing sector one more time. But even also in the housing
Rude.
sector,
Stop
talking about
crushing
its
people.
resilience.
Why do you want to
yeah,
crush
but
people?
we've had an enormous backup
Sentiment
in
is still
mortgage rates
bullish.
just the last
Oh,
few
I should
months.
show you guys something I
don't know
have
if
going.
if a
This is
housing
going to be
sector that's
cool. I'm going to share all this
hanging
with
in
you in the
there
future.
at 6% mortgages is going to hang in there at 7.25.
But for now, I have to
think
build
it's
it first.
premature to say it's okay. It was a hawkish speech, though.
Yeah, absolutely. Bob, I see yields are falling. Markets fell a little and then sort of recovered. What do you make of the
So let me
market's
see if I can
assessment
show you
of Powell here?
this.
Well, I agree
We
with
love
Steve's point.
Powell
I
no
think
matter
this
what
is
he does,
moderately
even if he
hawkish, but
nukes
not
us.
as hawkish as a lot of people thought. You remember, sentiment shifted
Look at this.
a week or so ago
Okay,
on
I
the
got
strong
it.
economic data that Powell was going to come out swinging like he did last
sec,
year.
guys.
Remember?
Hold up. So this is a live feed. How do I get it bigger? Like that maybe? Of all of the puts and calls. I know the market's going down because this feed actually, I could just see it. And so this is like a bunch of contracts that I'm interested in, and the price that you're looking at here is the exact mid of what's being traded. These are live trades. Like everything you're seeing here, this is a real trade that's happening now. And so, some are quotes, some are trades. And I'm getting like the sentiment and the order flow, and I'm going to be able to combine all these into some hopefully interesting signals that I can share live on the show. And then we can do some live trading and see what works and what doesn't. What's a good idea? What's a bad idea? I'm not pretending to know. I just want to learn and do the right thing according to what the experts have figured out over many years. So let's learn together.
Garden variety correction right now. The market really is anticipating this soft landing, and I think the risk is actually the growth is either too strong.
We're
or much weaker than
digesting. The
anticipated
market
right now.
wants to
this
take
economic data is going to be very, very interesting
a
in the next week or so. I want to see that PCE number. That's
second
gonna be big.
Well,
big
just
to
on
see
the
what it
PCE
wants to
number,
do,
Did he
if
actually
it wants to
release
break
that
low or
PCE
not.
number? Because no, but seriously, I mean, he didn't say
Looks
these were
like
the
it
Fed's estimates
wants
of
to
next
break
week's
lower
numbers.
Right.
He said these
to
were the
me.
numbers. So I think everyone's going to be looking at this rather closely to see,
But I
well,
guess
did he get an
not.
advance
No,
copy
we
of
just
that?
did break
Because
lower.
that's
Look at
what
that.
he
Let's see if we
reported
get
a
some
number
high
that hasn't been
volume.
reported
Yeah.
yet.
Those guys aren't crunching
so.
on deadline? You mean they have them a week
Sees-
in advance? Who knows?
Yeah, sees July PCE at 3.3, core at 4.3.
Interesting.
Sees it.
Yeah,
Okay, all
yeah.
right. Okay, it's still
Sees.
crystal ball as
Right, we'll
opposed to
find out in
Yeah.
a little less than a week.
Steve, I guess as you suggested, he
No,
did
I'm not sure
want
what's
to
gonna
get
happen.
really in the weeds with trying to estimate what the neutral rate of inflation,
guys wanna get
interest
what?
rates are,
What?
and
Who
therefore
said
how
that?
restrictive the economy is. But
Yeah.
he says it's restrictive, maybe not sufficiently yet. We got to wait and see. I just look at the way the market trades it.
Right.
1-year Treasury bill yields are at 5.4. That's right within the current Fed funds range. So if we go up a quarter or
bar's
down a
trying
quarter
to
by then,
get
if
higher.
the market is saying we're kind of here,
Wants to
it
go
doesn't seem as
higher.
if the market needs to be talked aggressively off the idea that that cuts are coming. You know what I mean? This is an argument you and I have had. How much is the stock market banking on future cuts?
So
or it's just
we're
kind of like, we don't know what's going to happen past a few months.
We don't know what's going to happen past a few months.
Yeah, Mike, I argue with Santelli. I discuss things with you, Mike. So I just want to be clear about that. Look, a couple things on that. The first thing is
What
that
was I hearing?
if
What Mr.
the
Steve has to
interest,
say.
one of the interesting things to me here was Powell reiterating
Steve, right?
this idea that if the economy needs to cool in order for
Leisman.
inflation to come down. That was something he
Leisman.
said last year. It's something that
Leisman.
hasn't happened over the next year. So if you want to be a trader out there or an investor thinking about rate cuts, I think Powell's kind of laying down a metric here for you that says we need to be below trend for a while. For me as a policymaker,
See, I think we're
going
gonna break up, but I'm too scared to sell my puts.
Really vanquished here. And before you get, and I guess I'll argue with you a little bit, too excited about the market reaction today, I would take Bob Pisani's comments advisedly here, noting how far the market came.
There
in
we go.
coming
That's
up
what
to
I want
this
to see.
level
Yes,
and
let's get a good
reacting
test
already
down. Let's
to the
go.
strong
Let's go.
growth and anticipating
That's what I was
the
waiting for.
Fed reaction function here when it came to these higher growth rates. He did throw it out there as an
Yes.
issue.
If
That,
we break
growth
this
running too
line,
high is an issue for the Federal
we
Reserve
could
to have to
get
address.
interesting.
He
It
didn't,
could
by the
get
way,
interesting.
mention higher interest rates, which kind
Right
of
at the
suggests
mid
you
of
that
the
at least
20-day
at this point, he's not
moving
uncomfortable
average.
with what happened to rates. So the market anticipated this
Boom,
in a
yes.
good way.
All right.
I think that they correctly assumed how Powell would react to this. And so there's no repricing necessary,
break
at
it.
least
I'll
today,
sell one
either
just
on the
in
cut
case we
side
don't
of
break it.
2024
But I think we'll
or
break
in the
it.
hike side for 2023 when it comes to being at a 50-50 for the November meeting.
Yeah. I was struck,
Oh, we were gonna
Steve, by
break
his
it.
comment that there may
Yeah.
be further drag from past
Yeah.
hikes.
The
Kind of
Bears are
reminded
like,
me of what
"Fucking
Harker
no."
told you
Or, I mean,
yesterday,
the
and kind
Bulls.
of what David's saying right now.
Put the car up.
Yeah, it is a big debate here inside the
Mr.
room. I will tell you
Carl.
this, in the hallways yesterday, this issue of drags, and it may be that
Look at
what
these
we're
Bulls. They
seeing
want to
now
push
is
up.
the
They're
effect
trying.
of what we were waiting for, which is now
Like
that
Tesla
rates
wants
are
to be
higher,
250. It
these
just
are
doesn't
the
know how to get
drags
there.
We're going to be getting. We haven't seen much in the way of
with
explicit
all these
drags from
sellers.
bank credit tightening. That may be yet to come. And now that these mortgage rates are so high, it may really end up cooling the job market. But
Boom,
more
yes.
interesting to me is
We
what's
need to
happening in
retest
the
this
belly of
before the end of the
curve in this
day.
3 to
We need to
7,
retest this.
year,
232. We
tenor
got to
of
test
the
this.
Treasury market.
We
where
might
this
not
is
be
the
able
place where
to
businesses
if
do
we can't
business,
get past
and I think you're in a place where
233.76.
you're going to have a bit more of that
These
monetary
lines are
policy
like,
drag than we've had in the
Yeah,
past.
not exact.
David,
I'm
he made a
just
comment about
being
inflation
fast.
being potentially more reactive now to labor market dynamics than it had been previously. And we're looking at wage inflation, but is that just a catch-up? Is that actually productivity? What do you make of his comments in the
It's a
labor
mustard.
market and how it
I think
ties
that is
together?
absolutely not proven at all.
is
Because
this?
as I say, the big decline that we've seen in inflation over the last year, where we've had wage growth has come down a bit, but it doesn't account for that. And even in core services, ex-housing, we think the stickiness has got everything to do with auto prices, and the lagged effect of that, rather than wages. But I think we don't, on labor market dynamics, why don't we admit that we don't actually know where U-Star is? And it's
We
an
don't
important
know.
point, because the Fed says we've got to loosen labor market conditions to fix this. But what that means is we've got a 3.5%
go.
unemployment rate right now.
So
The Fed
now,
says that by
if
the
we
end of
get
next year it's gonna be
down
4.5%.
right
That's
here,
1.7 million
then
people will
this
have
is
to lose
where
their
I
jobs
think
on the
we'll
altar of getting
get
to
some
2%
bullish
inflation.
action
sound
right
like
around
Elizabeth
here.
Warren.
Well, but it could well be that the actual
Can you
neutral
imagine,
rate of unemployment is
like, being Jerome Powell and just get, like, fucking Janet yelling at you every day? That's a joke I thought of this morning.
of the early 90s. We thought it was like 4.5 to 5
go.
back then. That was
See
the
if the
floor.
Bears
Yeah, this is not
gonna
an
bear it.
inflation-prone economy. The long-term structural, and indeed they're going to talk about long-term structural changes in the economy, but the long-term structural changes in the economy tend to push inflation down. It's more competitive than it used to be. It's very unequal in terms of income distribution, which
I'm
tends to
now
push wages
getting
down.
order time
6%
sub
of the
100
private sector is
milliseconds.
unionized.
It shows
You're
up as
not
0
going to get a
seconds.
huge union
I'll show you
movement
guys
pushing
how
up
in the
wages,
future.
even though you have occasional
Execution
strikes.
time
So
from start
this is
to
not a very
finish is
inflation-prone
sub
economy.
100
See what
milliseconds.
3.5%
That
unemployment does for you.
includes price discovery.
If we can avoid a recession at
It's
3.5% unemployment to get inflation
like
down to 2 at the end of
500%
next year, isn't that a win? I mean, why snatch defeat from the jaws of victory?
Here we go. Okay, we're breaking in.
Steve, what's still to come? Goolsby later today?
Boom.
Yeah, we have Lord of Messer coming up
We just went
and
purple.
Goolsby, and then we're going to get the papers that are out there talking
So,
about these structural changes.
we
and
wanna
how
test
things
down
like
here now.
debt and
We
supply
wanna test
chains,
right there
have changed
and
over
see if we
time.
can get
What that
these-
means, I think David's
get that,
point is a really
this gap
interesting
filled
one
right here.
about whether there's sort of a long-run bent for
See if we
lower
do it.
inflation in this country. I'm personally interested in the question of whether or not China's going to
And
be
then
exporting
if we get
disinflation
rejected,
to
we're
the
going to
United
shoot
States
back
and the
up
impact
from the
on that.
bulls so
I have
fast.
this,
It's going to be
crazy
crazy.
idea that
I
I'm
mean,
gonna
if we
kinda
find
be
support,
reporting
it's
among,
going to be.
in the hallways with some of the folks, which is this idea, and don't throw things at me, you guys, which is I think
Let's go back
ultimately
to
inflation
our friends at YouTube.
may end up having been transitory to a large extent, except that
there's
it
the
wasn't
Bears-
on the
or the Bulls
timetable that
coming
the
in right
body
now.
politic required it to be. And I think people got frustrated with it, but over time, the supply chain issues have been resolving themselves. You're into a goods disinflation regime right now. You may
Can
get
the
more
Bulls
of
do
that
it?
coming from China.
See, now the Bulls are making
and-
their
and
attempt,
the
and if
other
they
issue
fail
is that
here,
China
the
was on a
Bears
different
are going to
schedule.
come
China
in and freaking
ended its lockdown
dominate.
this year,
They're going to
then everybody
dominate.
got COVID in China, and maybe now China as a supply for the globe is just coming back online. They obviously have to get their act
Here we
together
go.
economically, but I think that
Now,
there could be some
so
better
the
news
Bears
to come
failed. Now
in inflation,
or
though
the
it's not
Bulls
gonna be a
failed. Now the
straight
Bears
line.
are coming in.
But this issue of whether or not a lot of it ended up being transitory,
I think
and
the Bulls are
idea
gonna
that
come
the
in
Fed
big
doesn't necessarily
time
have to either go much
in
higher or could even think about cutting in the
about
first half of
50
next year
cents.
if inflation falls further is something that might be a surprise for next year.
Yeah. S&P settling back in the meantime. To Steve's point about the market pricing the speech pretty
go back to
efficiently. It'd be
CNBC.
amazing if we went out on the day unchanged. Steve, Bob, David, thanks so much for your time helping us get through this. Still to come,
Okay.
the latest read on rates, where we go from here.
Well,
we'll check in with veteran Art Cashin in a moment.
Good freaking game. Mr. Powell and our friends at CNBC. The market is trying to digest it. There wasn't anything that new. This is fun. We're doing some live trading. This is the full vision being realized for the first time of this show. So look at this. Oh, here we go. Here we go. This is it. So if we break this candle, there's going to be a lot of selling. But I doubt it. I doubt it. Let's see what the sentiment is. Oh, shit. Oh, yeah, you can see it. Let's see sentiment. And I have my usual controller. This might be it. This might be it. Yeah, this might be it. Nah, this isn't it. They're not going to be able to break this. Can they break that? Oh, shit. They broke it. Okay, if they hold it now, if we hold 234.2, then it's going to be a massive bull run up. Because look at this. Oh, they're going to hold it. They're going to hold it. Holy shit. I don't think the sellers can get them down. Let's see. They're trying. Because the sellers want to push them at least here, right? Like we at least want to get down here. Okay. So they didn't hold it. And whatever happens in the next like 30 minutes, it's going to be a giant move to the upside or the downside. Let's see. Boom. Okay, here we go. Here we go. So what are we? That's pretty bullish. That was a big shift in momentum right there. I don't know if you guys saw that. I don't even know how to like feel what I said is true or whatever, but it felt like it. Okay, maybe not though, because we're getting it. So see these candles, they're penetrating lower lows. Like this is the battleground. The battleground right now is for this red candle. The bears want to penetrate 232.3, and the bulls are like, freaking no, not going to happen. And I think these no lower wicks mean something really important, and I don't know what it means yet. But the candles tell, every candle tells a story. The candle, how it relates to its siblings, and the whole, time period, and the whole price history. It's like life, right? It's all beautiful. Now, that's stupid to say. Like, it's just like there's a real story happening here in this price action. People are trying to find the truth. Like, they're trying to find what's valuable, what the real price of this Tesla stock is. And we're trying to like YOLO attendees and cash and stuff, but generally we're also trying to find out what's valuable. I think okay, so like to me, we are now in the bull control zone, because look at this. The bears failed. They just failed. The bears failed so far, because first of all, they failed when we got, they didn't fail, but there were no buyers into close. The buyers look at the price this morning. We get this massive indicator of interest. So we know we're all interested. Now we're at this previous level. So they haven't failed yet. If the bulls break right above this, because this is where we fell this morning, 234.12, which we already are above right now. Boom, that's it. Okay, so now if we hold this line, that's where things get interesting. So these are the minutely candles. So each one of these represents a single minute of price action. And just to explain how these things work, oh my God, every time I go to explain it, I lose my train of thought. So like how the price candle works is the anatomy is telling you 4 things really. It's telling you the overall price action, whether it was positive or negative, red or green. It's telling you the open price and the close price, and that is the kind of stems, the wicks, they call it, on the top of the bottom, this thing here and this thing here. And then it's telling you, I guess, the high and the low, which is actually the wicks. The high and the low is the wicks, the open and the close is the body. I flipped that up. Sorry for the confusion. And it doesn't really matter, but what matters is gaining an intuition for what these candles mean, what they mean. And I don't have that intuition at all. Okay, sellers are maybe taking, oh shit, fuck, not mean to do that. Let me see the impact of that action. It might be a good idea anyway. We'll just keep it. So, boom, let's go back. Where are we? I was looking at something that is no longer on the screen. That was not it. But yeah, like I want to show you guys these systems that I'm building to get better price discovery. Because we need to be, when you place an order, the execution time, it's everything. It's everything. Like look at how quickly these are coming through. Like there's just, I mean, and this is just the contracts I'm personally watching, like, which is like, maybe, I don't know, 100 contracts, like is nothing. But let's go back to the chart. NVIDIA, unnamed. Boom. Hopefully that's it. We're on Netflix. Oh, that's why things look different. Oh, that's not even the right chart. Netflix is kind of interesting too. Wow, look at this. Netflix is about to either gap way lower or go way higher. But I'm not even remotely set up to participate in that trade, even a little bit. Okay, wait, we're here. This is it. So now the sellers are going to try to penetrate this red candle. And if they do, it's going to be a glorious day for the sellers. And if they don't, the buyers are going to come in. I think the buyers come in right at, because look, we got these higher highs from that. It doesn't guarantee anything, right? Which is why if they break that lower low, that's why they win, at least this time period, right? Oh, there's a little bit of buyer pressure. We're getting to that low end of the Bollinger Band. The buyers are going to come in any second. Right here. Any second. Can they penetrate it? Can they penetrate it? Oh, shit. So far, they haven't. Let's see. Oh, shit. Okay, so what we have to, if we are a seller, what we want is to break 232.30. We are at 233.13. How is that? We already broke it. No. 233. Right. Damn. Shit. Pressed the wrong button again. Okay, fine. That's freaking epic. Well, I should also do this. I gotta focus on my trades for 1 second, but it's fun to hang out. Yes. Yes. Okay. Boom, 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 boom. I think we're up by. Go. Start. Up by. No. That's fucking funny. No. Do not do that. Oh my god. That is so funny. One more. Put that up there, and then hit this button, and we should be good to go. Okay, we're good to go. Now we can focus. So, yeah, what happened? What was the low? Oh shit, they didn't do it? Where are we at? Okay. 232.30 is what it was. Why am I looking? Holy shit, they didn't break it. Oh, it's bull run now. It's a bull run. It's a bull run now. It's a bull run now. Jeez. That's crazy. So, my favorite thing about trading, and this is all just such a new world to me, it's not like it's predictable, it's just logical. And like, here's what's going to happen because it's logical. I don't know. Anything could happen. Look, we're right at this 20-day. If we fail to break this as a bull, that the sellers are going to be like, weak bulls, we're going to fucking come in and test this Bollinger Band down here. Really, this line here, which is like the lines up with the lows of the previous day. But they already tried testing that multiple times. The lowest they got us to today was 232.3. So I think what we're looking for as traders is the low of the day. And we want to find out when that low was if we're in a bull market. But if we're in a bear market, then we're looking for the high of the day. And it's just, what is the stock doing that we're trading? Is it having daily moves up, or is it having daily moves down? And let's get this centered. Man, order sentiment is still like pretty freaking bullish. It's and it makes sense that it's bullish. And so because AI is real, and like, so is Putin. So it's not like the world is risk-free, right? Okay, so look at what's happening here. It's exactly what I just said. The buyers couldn't even get close to that 20-day I believe that's the is that the 200 day or the 20 day? That's the 20 day. Yeah. 200 day is 197. So we're actually far above the 200 day. That's kind of crazy. Okay. So the sellers are going to give it one more shot. And if they don't break it through, we're going to see a bull rally because the sellers then will get exhausted psychologically. But then if they do break through, then the buyers are going to be exhausted psychologically and we'll see a lot of high volume selling. And so it just depends on whether they can break this. Wait, what was the low on this? 232.60. See, they're still not, they got to break 32 cents. They got to break past that 30 cents. I mean, not 32, which is like probably right where, no, it's even low. It's right here. If the sellers want to make the bears like, you know, get a little scared and take the money off the table, they're going to have to penetrate here. And that's what I would do. I mean, will do. If they do penetrate this, then I'm just going to be like, okay, we're going to hedge because what's going to happen? We're immediately going to drop down to right here. Immediately, right? I mean, not really. We'll have to fight each of these levels down. But are we really going to find buying support down here? It could be, yeah, like if we failed up here. But so far, we're not failing. So far, the bulls seem to be in control since about whatever that is, like 2 p.m. How does that work? Let's get this symbol. There should be a way to change this to Denver. I'm in Salt Lake City, Utah. Anyone in Salt Lake, you know, don't bother me. I'm working. This is my work. Got the best job. So I don't even have to be good at it. Nobody, you know, anyway. This is a good job, a very, very good job. So what are we doing? Where are we at? We're consolidating. We don't really know. Everyone's just trying to figure out what everyone else is going to do. And so we can all go with the flow. And nobody wants to be the first mover given the tenuous situation. But it's bullish. It's bullish. If you ask me, it looks bullish. And why? Let's zoom out and take a longer view. How do I hide those? I don't know how. But just look at the slope of this line. This is just like one day, or I guess this is the week. So this is 1 week, okay? So let's go back to a month. We have this giant move up from 212. Now that I know some of the stuff I know, which is funny how recently this happened. I've had to learn fast. I actually kind of would want to revisit the low end of 220 just so I could short this gap and then buy it on the way up again. Like this would be a good gap to short. You know that if we break down past 225, we're going straight to 215 and probably to 212 for like a tenth of a second. And then if we don't find support there, you know, like who knows, whatever, lower. Just wherever we failed last time, we're going to go wherever we failed last time. So let's go back to the minutely chart and see what people are doing. Reset view. That cannot be right. Reset view. What am I missing? Reset view. What the fuck? Okay, so the sellers are winning. Okay, so the sellers have control. Sellers have control. And now we are going to see if the buyers step up. Let's see what the buyers do. I don't think we're going to get a lot of buyers. Let's see. That's something. I guess. Could be. I don't know. I feel like since we broke this line, we are going to go a lot lower. Because this was looking like a real clear support to me. But it could be just, that could be not how it is. Let's see where we're at. Boom. Boom, 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 boom. Boom. So Oh shit, am I not connected? Well, I should be connected. I have to check something real quick. Because we're live, trying to do both things at the same time. Boom. Okay. So yeah, let's see. This looks like fear of everything, and the markets are afraid. And so now that we got below that line, we are going to push even lower. Boom. That should be. Can't even tell. But let's see where we're at. Perfect. Perfect. So now the buyers maybe are going to try to come in and make something happen, but I doubt it because we are too low. We're going to try to fill this gap here. This is what we want to test right there, 230 to 231. Now the buyers might come in. I don't know. Probably, I doubt it. But yeah, interesting. Let's see. Okay, nah, the buyers are coming in. The buyers are coming in. Ba-dum, ba-bum. And so this is where we buy a put, though, because you want to know why? Because we don't really trust that these buyers are in control until they're back above right here. And so now we buy puts on every higher high until they lock in above 232.7. If we lose some money on puts, that's fine, because like if we don't lose the money on puts, then we're going to be able to capitalize and on this whole segment here. But for now, we're going to see how far they can get, how far the bulls can take us up. Now, they might be able to take us pretty far up, right? Because we are at the lower end of the Bollinger Band, so the move is definitely expected up. I just don't think we're going to get there until we penetrate a little bit deeper. Basically, we got to fill this morning's gap and even maybe test below it, like 230. I think we got to test 230. So what did I start saying? Like I started saying earlier in this stream, this is how fast this stuff happens. That, let me make a thing, and then we can make a thing right there. Perfect. Maybe they're finding a floor. I mean, look at this. This is like real strong consolidation. I wonder if this level matches. Nope, they just broke it. But let's still see if this level matches with anything. So yeah, I mean, yeah, a ton. So we'll keep it there. So maybe they're finding support right here, could be, and then it would be kind of dumb to buy puts, but don't want to risk it. Let's see. What do I think is going to happen next? I still think we're going lower because we didn't get all the way down to 231 for nothing. That means there's motivated sellers and not enough buyers. And I think we want to at least test 230 before the end of the day, and then maybe try to, test up here again, like 237. But this was pre-Fed euphoria. Boom. This was actual Fed fear. Boom. And then this is all digesting. What does it mean? What does it mean? How do the markets interpret it? That's what it is. And then we'll make a decision one way or the other based from this level. So we'll see how that works. I'm kind of thinking now that the bulls might be back in control. No, we're getting lower lows. Look at this. Look at if we actually zoom in on the candle. So the low of this is, whoa, how did that happen? That's funny. It looks the same. All right, maybe I'm wrong. Bulls might be taking. Whoa, okay, bulls are in control. Bulls just took control a second ago. Holy shit. Yeah, bulls are in control. So probably if we stay above this level, then they'll start building up from there. But yeah, we'll see if they're able to. Boom, boom. Are they? Maybe they're not. Okay, that might have just been like a push up. Let's see. So I am going to go and focus on this stuff now and do some trading, but this is pretty fun. And yeah, like, let's see if there's, let me just get one thing situated and we could look at the order flow and call that our show for the day, for this trading day. And so let's see, what am I? Okay, so we did break. Yeah, see, we want to test 230. But anything below here is fair game for the bulls. But it just makes sense psychologically. This is what I love about this stuff and why I want to get better at it, because it makes so much sense psychologically. Look at this. We have got to be going lower. Why are you buying right here? Like, I want to buy a put just watching you buy that. Like, let's freaking sell, buy, fucking go. And because this is each candle is getting progressively lower, and it has a very good reason to do that. Why? It wants to know if there's buying support at 230 or not, and then what's below 230 also is also a question. And so if the buyers find, if we find buying support here, that will be something. But yeah, it'll be interesting to see what we see. Boom. So, okay, this could be something. I mean, that's the first minute candle we had up, so we're going to need a couple of those. But usually when we do get the up minute candle, it goes very quickly up. So let's pause that actually. And do one of these, and then do one of these. And then see, like, make sure that's actually doing something. Okay. So what do they want to do? It's interesting. There's that, and then that. Nice. Okay, good. We're back in business. So yeah, see, the buyers are still not in control. And they aren't going to be in control for a while. This is going to go test down to 230, I believe. It has to. Right? Yeah. Well, or we're going to get support off of this level. And it would be interesting to do all that live with you guys, but I do have to focus and be able to participate. But it's we're right here. And this might be it. It's happening. Okay, there it is. This might be it. This might be it. Like, look, that's strong buying pressure. That's what buying pressure looks like. And then the sellers, this is like, if we can break this candle, then we're going far lower because that was a push. By far, this is all at the minutely candle. By far lower, I mean like just this next 10 cents or whatever, 50 cents. And they did not break it yet. Interesting. What's the low? The low. Okay, so this buying got triggered, I bet, when this candle went below the gap this morning. Because we always want to test these gaps. Now, this is it. This is it. So if we don't hold this, it's actually going to be some selling pressure. I think we are going to hold it, though, because I think the buyers will come in right around the low end of this channel, anything above 230. Now we could easily go lower though. We could definitely could. No doubt about that. Especially given the chairman wasn't like extremely dovish, but wasn't like crazy hawkish either. He didn't give us a pause, which is kind of like, all right, fine. This might be like a tiny price level as well, just that halfway point. It's so bearish. It's so bearish. Look at that. It's so bearish. This is why this is bearish to me. The bulls were in control above this line, right? Where is it? We never actually were in that control that long. In fact, now that I'm looking at it, it does look more like a ceiling. It doesn't look like a floor. No, the bulls will try to take control soon. First, look at how we're riding the lower end of this Bollinger Band. And so probably the price should be higher than it is right now, probably, but it doesn't have to be. And so it can penetrate outside of the probably so easily, and does all the time, right? It did right here, boom. And right here, boom. But that's usually a signal. Yeah, I think this is it. I think this is it. If it's not here, it's like another 50 cents lower. But it's lower. We got to test at least to right here. I kind of want to keep going so we can see if I'm right. But part of it is just looking at this order flow, and yeah, it's pretty bullish still. Boom, 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 boom. Well, that's not like working for me. So what are people buying and selling? NVIDIA is getting some calls. We flipped bearish. Okay, so we did flip bearish. Post Fed's words, we flip bearish. The way that we're hedging is with the QQQs, SPYs. We're buying inverse calls. We're doing the whole thing. So I want to trade this and see if I can play like the bears. And I'm going to be watching the tape and the order flow and see if we can make some money on the way down. But we might actually be really at the bottom right here. Like this might be the price going up imminently, because we tested the gap, which, you know, like it's not, I haven't had a great trading month in August, and which is why I'm like frantically trying to like learn all this stuff. But one thing I have discovered that gives me a lot of hope that this is not only learnable, but like doable as a kind of like long-term hobby is how predictable these prices are. They're so predictable. You can't predict like how low it's going to go, how high it's going to go, but the rules of the game are, look at this. The rules of the game are like when we're consolidating down here, that's like gaining some support. And then if we break that consolidation with this, we're going lower. And why is that a rule? It just makes sense. It's how humans behave, and humans coded the algorithms that trade the market. And so that's what they do. And okay, so now this is a key point. So we penetrated this, and that's going to give some of the bulls some hope. And if they get rejected, we're going lower, but I think it's going to bring in bull buying pressure basically. And because then they would have failed to even get us down to 230. But these wicks are so close to each other. 230, 30, 230, 35, 230, 35. And so see, that triggers the sellers massive. So at the end of this minute interval, okay, but then we get so far some buyers, you know, we're 10 seconds into the interval. And the reason that triggered the sellers is because they're like, what, you're going to break above our previous body open? Yeah, this is the open. Okay, so now if the sellers can penetrate this candle, that is going to be probably, we're going to test 230 then, because that will have exhausted the bulls. Because this is a big effort. Look at that. That's hard. You know, like that push, that's like, let's go. But then if there's too many sellers or just not enough buyers, like that's not going to go anywhere. And by mid-afternoon, people get exhausted and the price action either goes euphoric or boom, look at that. Look at that. That's a change so far. So that's going to cause selling. Yeah, right. I was going to say, like it's a repeat of this exact setup right here, right? If we do one of these, then the sellers are going to be like trying really hard. Here we go. Yeah, if we penetrate that, I do think we're going down to see if we can get to 229. If we get to 229, then it kind of becomes really interesting as far as like shorting and stuff goes. Nope, they just got it. Okay, bears are in control. That was it. Sellers are defeated for this segment. And so now what is going to happen is we'll see if we can. So this is a hard ceiling now. Why? We got trapped in the box. This is happening in the minute candle. You can do this at the 2 minute, 3 minute, 5 minute, day, week, month, year, and all these rules apply, which is why we freaking love it. And so here it is. If we get rejected, which we did obviously on the first try, we're going to try again, but you're always going to get rejected on the first try. And so we'll try probably 2 or 3 more candles to push through this. And if we can't, then we're probably going to break these lows, but we pushed. Okay. So the bears are in control, the bulls are in control. So now the bears are going to get pissed. That is not going to make the bears happy one little bit at all. So what are they going to do about that? They are going to try to do a ton of selling pressure. But that's when the bulls would come in and be like, freaking, we have so much dry powder, it's bananas. And your selling pressure is not going to get us down. And this is a very important level that we already held for over a minute. So now we're in a bull control area. And the reason I say it's an important level is because of this gap here. See these 2 bars? We're above it now. So we were trapped in the box, not very long, but we were trapped in the box and we got rejected every time we tried to get out of the box. But then enough buyers were like 230, come on, don't be dumb. Like we want it to be 250. And so really we know it's 500, but we will not abide 230. That we will not abide. And so far that's what the buyers are saying. Now we're just getting above the 20 period. I think this is actually the 20 period. So I think this is this orange line. I think if it's on the minutely interval, then you're at 20 minutes. Okay. Oh, weak. Holy weak shit. Look at that. Selling was so weak. Okay. Is this weak sell? Okay. That's pretty strong selling. Okay. Nice. I was like, that was weak shit. So that wasn't weak shit. That was the beginning of a strong sell. So it defeated just the tip of that. So they began it at the end of that interval. I wonder how these algorithms are actually trained at the interval level. Because a lot of this trading is done by, robots. Oh my God, powerful fucking bulls. You guys know, I always say the wrong word. Like I told you, I'm a retired software engineer, so I don't always get it right. But like, you know what I mean. Like, don't be pedants. Don't be pedantic. Like when you're like, I saw a great movie. Oh, that's a TV show. It's not a movie. It's a show. Like to me, if I was running the game, you exit the game on saying stuff like that. That's an Easter egg. Instantly get rejected out of the game. God, this is strong bull right now. Oh, it's going to break way above this. Okay, it's going to break way above this. So I think we're going all the way back up to 232. If we get past here, then we definitely are. But I think we already are, because once you get into no man's land in terms of your recent price history, anything can happen. And generally what's been happening will continue to happen. So if you're going down, you'll keep going down. If you're going up, you keep going up. From like my limited experience. Now, look at this green bar. I was going to say, this actually would be a good time for the sellers to come in and just make an effort. And so, damn, it's powerful freaking bulls. Now, this is concerning because the sellers did get us lower. This kind of makes me want to sell a couple of calls here just to be, well, just sell one just for fun while we're on the air. Oh, wrong choice. Wrong time. Whoops. Okay. Well, I mean, I should have trusted my instinct. My instinct tells me we're going to go to the top of this body, which is 230, 239 right here. And that's where I'll sell a call once we get there. And then if we hold that, okay, we're doing it right now as we speak. If we hold that and don't get rejected, like it will be what? A pretty big deal, I think. That'll be a pretty big deal. So this is it. Can we hold it? Oh, see how it just is getting up to that? Oh, but we broke it. Okay, this is it. This is it. Nice. So now what is it? We might be in buy put land soon. I think we should be in buy put land soon. We should probably be in buy put land. And just because we need to go right back down here, right? Just soon. Before we go down here, we may want to first test 233. I think we probably want to go back and test at least the bottom of this low candle real quick, which is what? Why can't I see it? 231.70. Not working for me. Nice. Okay. So let's see where we're at. And then if we don't go retest down here, then we are going to go way higher. But I think we have to retest. Let's see what is gonna happen. So now you see the Bollinger Band expanding and the sellers are coming in because they're like, what? Look, you just broke past the Bollinger Band. Wow. Wow. That's crazy. That's crazy. So yeah, if we might be skyrocketing up here then. Like, it just depends on how much selling pressure there is or how many sellers. Let's see, what do we got? What do we got? No, I think we're going to fail this ceiling and do a retracement. But we could push up. It's hard to tell where we're at. Yeah, I guess we are going to keep going up to at least here, 233.30. And then we'll see if the sellers can make a play from there. Okay, this is, wow, look at that gap up. This is awesome. That's some motivated freaking stuff right there. So now, okay, I gotta focus on this stuff. Like, this is what I would like to do more of when I have better tools to be able to support it. Good luck to everyone in the markets, and thanks for,